Hey everyone. So last week, July 28th, I made a prediction that mortgage rates were heading down. And I got a lot of heat. I got to tell you, I got a lot of heat. Well, the feds didn't change the rate, which we've explained this multiple times. I'll explain it one more time. Mortgage rates are not tied to the Fed. So what happened? Well, I don't want to say I was right, but I was right. Right now, government loans and conventional, but we'll just stick with government loans right this minute. VA, FHA, they're easier to track across the board. So they're down about 5 percentage points. So 5% less. It costs 5% less right now to buy a house than it did last week at this exact same time. What does that mean for you? Well, here, let me just run this by you. Last week, the average government loan was running about 6.8%. Today, 6.47%. Doesn't sound like a whole lot of deal, a whole lot of money, but it saves you $105 a month on a $500,000 home. $105 is a lot, but affordability-wise, it just gave you $16,500 more purchasing power. So if you're looking at 500 last week, you're looking at 516, 520, somewhere right in there now. That's pretty good. So you just increased your buying power by doing absolutely nothing. So anyway, so what happens? Are we still going down some more? Maybe. I would assume we're going to go down a little bit more. Everybody's predicting the Fed now is going to cut the rates in September. Now let me give you everybody a warning. Again, like we said at the beginning of this video and multiple other videos, the federal funds rate, which the Fed sets, is not tied to mortgage rates. The mortgage rates are based on a 10-year treasury bond. So right now that is an investor bond that's traded, and the investors are already pricing that into the bond market for mortgages. So what does this all mean for all you guys? It means you can go buy a house for a little bit less every month. Finally, a tiny bit of relief. But it also means you can afford a little bit more house. So if you're right on that bubble, you can afford a little bit more. And everybody last week was smoking me all up, down one side or the other. Like I had no idea what I was talking about. I study this. 20 years of doing this business and 20 years of studying how rates move and what makes a rate a move. Yeah, it's good stuff, guys. Great stuff, actually. So what does this all mean in the end? Final story, icing on the cake. Here's where we are. Go buy the damn house now, before rates do come down even more and people go crazy and start pushing the values back up higher. There is tons of houses on the market. Every market I work in, Colorado, Southern Alabama on the coast, and the panhandle of Florida, all have tons of availability on houses. Sellers are still giving away some money too, so let's take advantage. Lower rates, lower payment, more affordability. Let's go. Talk to y'all.